day all. Ira Epstein of Linn and Associates with your metals market wrap-up for this Thursday, and we are now at June 13th, 2019, pushing just after 3:15 p.m. Central Daylight Time. Well, by now you know today, if you're watching news of any type, some tankers were hit in the Gulf of Oman. The Secretary of State Pompeo came out today and believes it's a state operation that did this without naming, I think, Iran directly, because what you've got to be careful of, it might not have been Iran per se. It could be an Iranian-backed faction that is doing this, like you've got in Yemen and so on. But he's pointing the finger right at them in the news conference, and be it them or one of their factions going on. And this is a problem for everybody, because now we're getting on a regular basis where it's picking up, and there's a total of 6 tankers that have been hit in that region. And what are you going to do? You know, you've got this, I think it's 21 miles wide, the Strait of Hormuz, and the shipping channels, though, are only about 3 miles wide. So you've got to be very careful as to where you're at with all this, and will you cut off the oil? And I think that's part of what this game is, and you can see how the oil prices rallied today. They didn't go up dramatically, but they were up. And the gold got what I'll call that wartime bid back into it. Copper's not going anywhere, so it tells me it's more fear about the market. Yet all that fear, you still had a late day rally in the stock market that held very nicely. So when we look at the gold market is for the week down $1.40. The market is trading in that 1330 zone. Our first price count when we had done our gold report was around 1336. So now the question is, are you going to add another leg to the market at this point, or are you going to consolidate more? That, I think, is the question that's going to be answered. I took a look at the gold, and I wanted to see what the market was doing in terms of Fibonacci. So I ran from this low all the way up to that high. And you can see you're over the 62% range. So this market, if it's really a strong market, probably isn't going to give you a break back down here. If it does, it's not quite as strong as it appears. I've noticed that when markets decide to run, and I'm going to use that word run, and that was a run, you get this consolidation. You don't get those type of breaks you often look for, which would be to the 62% number. A pullback to it. When I look at the action here, you can see the stretched out move from this 1350, 270. That was your correction, $30, almost like that. Now you've come back up, and the question is, you're going to be able to go higher, or is the market going to settle in right here? In terms of a crossover, you got it today. I've been pointing this out to you, I think, a couple of days here, that we're getting to the point where you could get this 18-day average to cross over the 100-day, because today's action was so strong, it carried them over it. I didn't think it was going to be today, but it was. So now the question is, on the pullbacks, wherever this 18-day average is, that would be where I'd look for the first support of the market to come in if it takes out this 1323.60 level, because this market's got a bit of marching to do before it gets up to that number. In terms of resistance, it's all the way at the top Bollinger Band into the 1360 zone. So I don't see any moving average or anything else that can stop the market, and it is overbought. So I'll stick with what I was saying. You're in a zone right here where the market is spinning, but of course, everything that's going on in the Gulf of Oman, the Strait of Hormuz, this is all stuff that could at any point lift this market to even higher levels. And traders are a bit nervous too, because on, I think it's the 28th or so, we have the G20 meeting coming up. That's going to be important. The rhetoric from China is not sounding overly good to make a deal between the two presidents to get negotiations back on track. In looking at the GLD, the popular ETF, uptrend, higher lows, higher highs, a cleaner chart than the futures. I've said that yesterday. You've got those higher highs. You'd have to take out this 134.88 for me to get nervous, but here's what's going on. This market got its bullish crossover before the futures. This did this on Monday, and take a look once you got that, how the market's been reacting since then. The question now is, do you take out that high? That's how I'm reading it. Should you get back under this low, it would create a problem for the chart, and you could find yourself back into wanting to challenge support down here. I'm not seeing that just yet, but I am concerned that this is an overbought market. In GDX, the difference here in the miners, and I like what I'm saying, is you've got an embedded reading. That's power. I've said before, and I'm going to say it again, often when you're going to have a real bull market in gold, you get the gold miners going with it. And this is going on right now. This is that ETF of them, and this looks pretty strong. The gold-silver ratio, I guess you're just going to have to say that the industrial metals, because of China, are not in the same camp as a whole. That's not true for all of them because the palladium market's on fire again. But when you look at this ratio, you can see how gold just keeps gaining time and time again against the silver market. When you come to the silver, this is just a chart caught in sideways action. You can see that the Bollinger Band and the bottom, it's a broad range, but that seems to be what we're caught in at this point. I don't see a trend right here. In the copper market, I see downside bias because you're staying and respecting two things. The challenge of the 18-day average of closes gets thrown back, and you're staying more times than not. In fact, you only had this one close over the 18-day average since you've got to go back here into April. Now, the question for traders is, does this mean that this zone, this 261, is low enough to get some market attention? I don't think you can say that. And the reason is I think this market, we call it Dr. Copper, is going to wait and just spin its wheels in many gyrations here in front of that G20 meeting. If you don't get the two powerhouses talking to each other, and copper is used, almost 50% of the world's copper by China. I'm not saying that they won't have internal demand for it, but their external, the products they're going to ship, especially to the U.S., they're going to fall off rather sharply. In the palladium market, you've got the lower low, higher high, and the battleground of the 18-day average. Again, a market with no trend. But here's the market that's trying to reach and come back up. And that's because prices in about a year in palladium went up and doubled. And they got themselves way up here into the 1550 area. We had a correction of about $300 an ounce down to this zone. It's found a base again, and the market is moving up. You still have tight supplies. You've got to understand where you get this material from. Admittedly, though, this is popular in what? Emission control in cars. And as that's taking place and we're selling less autos, you got to wonder about the supply-demand part of it. In the dollar index, the market's in a corrective stage. Now, what do I mean by that? The overall pattern was down. Then you hit the 100-day average in the Bollinger Band, and suddenly the market just started spinning right here. And now it's got a pattern of higher lows, higher highs, but that's countered because you're under the 18-day average of closes. So you got bias down. The short-term trend is defined by a swing line higher and momentum trying to correct an oversold condition. You could get up to this 97.35 level. That would be the resistance. I mean, you could go higher, but that would be as a normal thing that I'm looking for. It probably had a little bit of a boost today because of the tanker attack as well, and a lot of markets looked for safe haven buying, and you saw it in the bonds and the notes. You saw it today if you look at the Japanese yen. You certainly saw it in the gold market, and the stock market's, well, sort of in its own world right here. I'm Ira Epstein. Remember, I will talk to you all tomorrow. You have a good day.